I see this time and time again. That's why I'm pointing out, and on a daily basis, is I'm having calls with people that are like, "Hey, I'm just gonna, I heard I could just roll over my old 401k into a Rob's rollover," and then usually when they meet with a CPA that we work with, the CPA will shoot it down for them and say, "Look, it's not the worst thing in the world, but it's not the best thing at all, and here's why." So there's lots of ways to get inside these businesses with a little bit out of your pocket, being creative.
Welcome back to the Investor Financing Podcast. I'm Bill Davis, and today we're zeroing in on a challenge a lot of first-time franchise buyers face. And that is, here's the question: how do you fund a small franchise, say under $150,000, when most SBA lenders don't want to touch those smaller loan amounts? Whether you're eyeing a vending route, a mobile cleaning service, or a lean home-based concept, this episode will show you creative ways to make your deal work. Joining me is Beau Eckstein, an SBA loan strategist and franchise advisor who's helped countless people start businesses even when the bank said no. Hey, Beau, let's get right into it. Why is it so tough to fund these smaller franchise deals under $150K, even with SBA programs technically allowing it?
One is, I think it's amount of time you spend on a file. It's like, well, to banks, it's just, well, it makes more sense to do 250,000 or 150,000 at minimum. So a lot of the banks won't do sub 150. Most of them are around 250. But the good thing is SBA, they've been pushing to get more smaller loans done, which makes sense. It's helping out everyone, not just people that are doing bigger businesses. But we do have a handful of banks and non-bank lenders that specialize in the $50 to $150,000 range. So it's really about bringing the right deal to the right lending institution that specializes in franchise financing. So when we really narrow it down, there's only about 5 or 6 that I can think of out of all the lenders that look at these small deals. But luckily for you, if you're watching this, we can help you get these deals done.
So for someone looking at a business with, say, a total startup cost of $100 to $150K, what are the realistic funding options available right now?
We can fund up to 90% of the total project cost. Franchise fee, working capital, equipment needed, employee salary for the first few months. That is the total project cost. Generally, we can go up to 90% of the total project cost on these smaller SBA deals.
So let's talk about some creative combinations. Can someone use their 401k or credit lines or even seller financing in combination with an SBA microloan?
Some of the franchises, they'll do some discounting or they'll finance some of the franchise fees. Some of them will. So that sometimes helps. But generally, the creative side of this, I would say, is you need if the total project cost is $150,000, you need $15,000 equity injection. So that you can borrow against the 401k, perhaps. You can borrow up to $50,000 or 50% of what's in there, whatever's less. So that's always an option. You can potentially get a home equity line of credit on your house if you own a house. A lot of these master brokerages, they also own Rob's rollover companies where they set up your Rob's account and they really push you to do that. Whereas if you're planning on taking distributions or paying yourself a salary, a Rob's isn't the most tax advantaged type of entity to own your business in, something like an S Corp or something like that. So before you go and do that, you should look at high leverage SBA financing. It's usually a better option for you. And then you can get a lot better tax write-off. So I see this time and time again. That's why I'm pointing out, and on a daily basis, is I'm having calls with people that are like, "Hey, I'm just going to, I heard I could just roll over my old 401k into a Rob's rollover." And then usually when they meet with a CPA that we work with, the CPA will shoot it down for them and say, "Look, it's not the worst thing in the world, but it's not the best thing at all, and here's why." So there's lots of ways. That down payment can also come from a gift from a family member, or you can bring an investor partner in that owns less than 20% of the business. So there's lots of ways to get inside these businesses with a little bit out of your pocket, being creative.
So to follow up on that, for someone who doesn't want to drain their savings, what's one smart way to structure a deal like this and still maintain a cushion?
See if you can borrow against the 401k, family gift. gift. Bring in a partner that will put up the equity injection, and they get a small percentage of ownership in the business. It's that simple.
Are there any particular types of franchises or industries you think are perfect fits for these smaller startup budgets?
Vending, B2B businesses, home service businesses, childcare, educational for children, youth sport leagues. There's lots and lots. I mean, I can think of probably 100 off the top of my head right now.
All right, great. So here's the bottom line, folks. Just because you're starting with under $150,000 doesn't mean you're out of the game. There are smart, strategic ways to stack funding and launch the right businesses, especially if you're working with someone who understands the lending landscape. Big thanks to Beau Eckstein for joining us today. If you want to explore lean franchise models and funding options that actually fit your budget, head to bookwithbeau.com to schedule a free discovery call. Until next time, this is the Investor Financing Podcast. Let's get to working on building your future.
Hi guys, Beau Eckstein here, and I'm with baby Beau. Baby Beau's just a little over 4 months. He's my first child, my wife and I. So if you want to create legacy for your family, I highly suggest you go to our Business Ownership Summit. You can find all the events we're doing. Primarily, they're all free. You can go to beaueckstein.com/events. And I hope to see you at one of our events. We teach business ownership, how to leverage SBA financing, tax strategies. I'm not a CPA or an attorney, but we bring CPAs on. You're going to learn why everyone should own a small business. So I hope you attend. Go to beaueckstein.com/events. I'll see you at the next one. Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.